Hey folks, Dan Frio here with your closing bell for October 9th, 2024. So mortgage rates basically stayed steady for today. It's kind of the calm before the storm. What's the storm? Well, tomorrow we get jobs informations and also the CPI, the consumer inflation numbers. And we'll see what the Federal Reserve does at that point. So if you look at the equity markets, you would think, well, the world looks pretty nice right now. Look throughout here. Everything's green above there. We got the Dow Jones up over 400 points, and we also have the VIX coming down. So it means anxiety's coming down. We have a hurricane. We have all these other things in the background contending to this. But if you also look at the financials of the economy in general, I know I've been using this slide for a while, but everything looks pretty peachy. But then you open that book. Remember, we always say, don't judge its book by its cover. We have inflation that's coming down. This number is supposed to come down even more tomorrow because housing inflation is coming down. So that's going to be one piece of the puzzle tomorrow. And then we're going to see how the jobs report comes in. So that's where it's coming in. So I want to take it over to the calendar to show you guys what's coming in tomorrow, just so you guys understand. Because the Federal Reserve they're still concerned over inflation. But they were created for two reasons. And to keep these two things in control. Those things were interest rates or inflation, okay, and then also jobs. So tomorrow, Thursday, we get continued jobless claims. So that's going to tell us how the job market's looking. Then we're going to get the CPI numbers, which is consumer inflation. That's coming in tomorrow, and then initial jobless claims as well. And then we're going to go down through here on Friday, and we're getting also a pack of information. We're getting the PPI, which is producer inflation. Okay, so how much in producer inflation? If it's going up, they're most likely going to have to pass those costs over to the consumer. Thus, those will go up. So we're focused in on that tomorrow or Friday. That's the main news that's coming out on Friday. So that's what we have so far today. What's expected with tomorrow's CPI number? Right through here. Yahoo's coming out and saying inflation expectations are to slow in September, but upside risk looms amidst start of Fed easing. So the Federal Reserve, they're monitoring this stuff, and as long as everything cooperates, they're going to continue to cut. Now, the cuts are the things in question. The Federal Reserve came out and said, okay, inflation went from 9 to in the 2s. Okay, so we have the room to cut. You're going to hear a lot of things saying, well, what's the neutral rate? Okay, what the neutral rate is basically is the federal funds rate minus inflation. Okay, so let's get the federal funds rate right over to here. This is our piece of the puzzle for the federal funds rate. So the federal funds rate right now is 4.75 to 5. Okay, we have inflation at let's say 2.5. Okay, so that means they have room to cut, maybe 1.5%, 2% to cut. So that's the proposals out there. But what actually is going to take effect, that's what we're focusing in on. So Steve Leisman, he has a bead on maybe what the Federal Reserve might do in their internal thinking, because they just came out with they call it the notes from their last meeting, telling us who said what and all this stuff. So let me let Steve Leisman take it away for you so he can explain what the federal officials spoke about, who elected to do 50 or 25. What did they actually do behind closed doors? So let's check it out.
Welcome to Power Lunch. The minutes of the Fed September meeting show quite a bit of disagreement over the issue of 25 or 50, the 50 base point rate cut that they ultimately agreed on. I'll get to that in a second. Let me show you first where they agreed. All participants agreed it was appropriate to ease. They judged it was appropriate to continue the process of reducing the funds rate. And if the economy evolved as expected, they said it was appropriate to move to a more neutral policy stance. Most saw policy as restrictive. They disagreed, however, over how restrictive to be. A substantial majority, it says, supported lowering the funds rate by 50 basis points. However, it did not say how many or what, but a substantial majority wanted the 50. Recalibrating policy, they said, would bring it into better alignment with the inflation and labor markets. Some, however, would have preferred 25, and a few others said they could have supported 25. So some plus a few, we don't know how many that is, but it was more than just the one dissent is what we're learning that supported just 25. Several noted that 25 would be in line with a gradual path of policy normalization. A few noted 25 would be more predictable. Now, on the economy, some worried there was differences here that probably reflected the differences over 25 or 50. Some worried that the easing in the labor market could transition, quote, to a more serious deterioration. Many saw the economy growing at trend over the next few years, and almost all saw diminished risk to inflation and downside risk to employment. Several worried about consumer spending from cooling of the labor market. Some were concerned the pace of hiring was not strong enough to keep the unemployment rate from rising. So this was all before that recent September employment report that we got in October. But so there was a lot of concern about the job market. Further labor market cooling was not needed to get to the 2% inflation target. And a couple people were concerned, though, about upside inflation risks from geopolitical events, very much the way we heard this morning from Dallas Fed President Lori Logan. So, guys, back to you. I think this 25 or 50 debate is something that could have an impact on future rate cuts. Going before the minutes, I haven't seen it since then. There was a 1 in 5 chance the Fed did nothing in the futures market for the November meeting. 20% probability of no cut in the futures market for November, guys.
So, Steve, let me just linger, if I might, for a second here. There was one dissent, but does that dissent necessarily mean that that individual wanted no cut whatsoever, or was just adamant that they wanted a 25% basis cut and they weren't going to go for 50 like everybody else apparently did, even though some would have preferred 25?
Yes, Tyler, as usual, a pinpoint clarification question from you, sir. That dissent that was out there was for preferring a 25 versus a 50. And what we learned in these minutes, again, thanks for the chance to clarify, is that there were a bunch more people, we just don't know how many, that would have gone along with the 25 had it been apparently either the majority decision out there or if they had their druthers. Remember, not everybody votes, only 12 of the 19 votes. So we know that 11 of the 12 voters supported it. It says a substantial majority supported 50. The question becomes, Tyler, how many folks are on the fence for the next 25? If you get, for example, tomorrow a higher than expected inflation print, if we get another strong jobs report, does that put more on the fence? Tyler, while I'm talking, I'm going to log into my computer, which of course I'm forbidden to do while I'm reading the minutes in lockup, but I'm going to give you a fresh quote as soon as I can on the probability. It doesn't look like it changed. It's still a 20% probability I'm seeing now of no change, an 80% probability of a quarter, and then going into the December meeting, an 85% probability of another quarter. So the market did not change based on these minutes. And I don't know if it should have or shouldn't have, but we do know there's a bit more support now, Tyler, than there was for just the 25 than we thought, either from the statement, the dissent, and from the press conference.
Okay, so he basically wrapped all this up on my behalf for me. So he was saying that this is where the Federal Reserve sits. So a lot of the numbers are starting to change right here on the probabilities. Now there's a probability of 21% chance they're not going to do anything. This was 12, I think maybe today. So this number's going up quite a bit. I'm still on the bandwagon. I think they're going to do 25s and 25s and 25s along the way. Only time's going to tell. Okay, so the calendar we have right now, like I said, tomorrow is going to give us a lot further information on that, and we'll be back to let you guys know how that takes place. But my thoughts are, right now in the MBS market, we have the MBS is down 19. I think everybody's positioning tomorrow to just see what's going to happen, and that's what we're doing here as well. So I don't think we're going to have a shock and all number tomorrow. I think it's going to be pretty precise. The number, I feel the CPI number is going to come down just a little bit. And the reason behind that, we have housing inflation going down. But here's the biggest kind of unknown is what's the jobs reports going to look like over the next several months? Well, while they're cleaning up all these disasters that we're having right now, because you're going to have tons, millions of people displaced. Okay, and you're also going to need workers to come into these areas to clean up and build and recreate everything. So we're probably going to see a dive in the jobs numbers here soon, so that might help this equation. But then I think they'll start coming back up, and they might even tick up quite a bit because we're going to have to basically rebuild the east coast of Florida. So that's the concerns we're having in the markets right now. But fortunately, if you're in the stock market, you're high-fiving people every day because this thing keeps hitting record number after record number. So again, folks, this is how those with money are making more and more and more money. So I'm trying to educate you on that as well. So check out this morning's video if you would. I added another ETF for our investments so we can follow those along, and we're going to do those every Friday. And I'll add to the equation, one or 2 days each week. I'll show you the portfolio if we're making adjustments to it or anything else. And then please let me know if you guys would be interested in a live event. Maybe we can do that on Tuesdays and Thursdays. I'm going to talk about stocks, bonds, ETF, different investment strategies you guys can make. Even if you're not making much money, how do you put just a little bit aside each month to take your basically change your whole life? Okay, so that's our whole goal on this channel: education and helping you create wealth. So my name is Dan Frio. I'm actually a mortgage advisor. I'm a loan officer in the Chicagoland area. But the good news about that is I don't care where you are in the whole country, you can use me. And the reason being is I'm licensed in all 50 states as well as Puerto Rico. How many other loan officers, especially brokers, are licensed all over the country? So how do you reach out to us? How do you find information about me to reach out to us? Well, the first thing is if you own your house already, we're going to allow you to pick the rate you want to refinance. Okay, so check out our website. It's called the RateWatch. You're going to put in your information right through here. But here's our main website. If you go to the top, it's the rateupdate.com. I like to keep me on the other side of the equation here. So let me move me back over here. Here's our website. There's a bunch of tools and things up top here that you can use. But the one thing I want you to use if you're looking to buy that first house, right through here. There's grants in there that we handpicked. Some are national, some are in the Chicagoland area. Check those out before you hit the apply now button. But if you don't like hitting the apply now button, because I'm even leery about things like this, I don't like putting my social security number and all these things, what can you do? Well, call us. It's pretty easy. I don't have a huge call center. There's 4 of us now. We added Frank. He's a friend of ours back from when. So if you were with us 2, 3, 4 years ago watching our videos, Frank was with us then and he is back now. So we added to our staff to make sure we can handle all your calls. So if you want to call us, call 844-775-5626, or you can reach me personally at dan@therateupdate.com. And that is it for today. So hopefully this is the mess of the day, but I do have some information. I will be traveling the next few days. I'm going to go back to see my brother-in-law, so my videos might be kind of hit or miss. We will be live tomorrow, though. I'm going to try to travel this evening, so I'm there for our live event tomorrow, but I'll try to post as many videos for updates for you guys as I can. So thank you so much. Keep me in your prayers, me and my family in your prayers. I'd greatly appreciate that, and I'll see you tomorrow. Take care. Bye-bye.